And welcome to another edition of the Nerdy Agent Podcast. They had to have me add that.
So much better.
I'm your host, Luke Pettersen, with my brothers and fellow nerds, Josh and AJ. Today, we are going to discuss all things builders, builder confidence, what it's looking like in the Twin Cities area specifically, because that's where we sell real estate, and what the current market's like looking for builders. To start, explain to the listeners how we track builder confidence, what it is, where they can find that, and what it means.
Yeah, so we talked about a couple different podcasts, so we're not going to go way into the index again, but there's a home builder confidence index that gets released on a monthly basis. It includes a number of different questions that are asked of builders nationwide that kind of gets summed up into based on the way they respond, gets summed into a 1 to 100 score. So then we have an ongoing metric that shows us on a 1 to 100 scale how confident builders are over time. So it's a really cool thing to be tracking because, as we'll talk about in a little bit here, home builder confidence leads to certain behavior changes that lead to impacts to both supply and demand, but also little arbitrage pockets for buyers. And yeah, it's a really important metric to track.
I know we're not going to go super in depth into the index, but what's it looking like right now compared to where it was in the last couple of years? Just so people know.
And months. I mean, what's interesting here is what's funny is looking at this chart. If you can see it on there, probably not.
They can't. You just held up.
It flows a little like
paper.
But you guys, you know what's funny is that are the builders getting less confident or are they just really freaking cold? Because it looks like last year the same thing.
It's kind of a similar trend to the Minnesota market, right?
It really is. I mean,
give the people some numbers.
Well, granted, okay, so like back in 2021, the builders were very happy-go-lucky because the rates were so good. So, the money was essentially close to free. So they said,
flip a coin.
Yeah, right. Oh yeah, I had a flip a coin situation. That was a fun one where there was getting multiple offers with builders. There was all sorts of stuff. They were paying out much less in commissions because they didn't really need to pay out as much to get buyers in the door. They didn't have to offer incentives. They didn't have to negotiate. The index was around, in the 80s. So this index goes to 100. So they were 85% of the top.
Which is like the top we've seen.
Yeah, right. And slowly as rates got worse, and again, seasonality crept in from, the end of 2021 to the end of 2022, the index went from 84 to 31 with a large drop around the end of the summer of 2022 when we did see those high rate increases. Now, we saw another seasonally more confident set of builders this year even, but we didn't see it creep back up to those previous highs, so it only got up to 56 this year in July. And now it's tapering back off into the winter. But one thing to note is right now it's at 34 for November. If you look at November 2022, it was at 33. So they're actually 1 point more confident than they were last year. So while it is going down, it will be interesting to see when December comes out, and we don't have this chart any further back than this, but I would imagine that typically December is the bottom of the year.
It's confusing to me. This chart makes it seem like builders have a very short-handed mindset. Like in December right now, if I was a builder, I feel like I'd be predicting that June, July are going to be better months this year for me, May, June, July 2024, than they were in 2023. So my confidence right now would actually be pretty decent.
It's more reactive.
The rates are moving in the correct direction.
Well, and I think a good thing, maybe you guys know the answer to this, but what are the questions that lead to this index score? That would be interesting to look into because they might be more, Luke, related to, are you giving concessions on spec homes right now? How long is it taking your spec homes to sell? Are you confident in selling your spec home? Stuff that's already done rather than how many starts are you doing?
Because if you would theoretically, they'd be starting a bunch right now, theoretically.
But behaviorally, at least from what I've seen, the builders tend to be a little bit more reactive just based off of all of the fears that are still out there, since 2008 and with the market that we're in. Builders have had pretty bad moments in the last 20 years that have caused them to be a little bit more skittish, it seems, right? So right now, we're seeing it too. I mean, like end-of-year numbers for builders, I don't think are going to be as impressive. I mean, Lennar actually had a pretty good quarter last quarter, but with what they're doing right now, you can see there's a lot of fear in the thing. They're trying to get rid of homes. And I think it's just a reality that they always look at things pretty immediately, like any other large corporation does. But then they probably forecast out into the future, but they're not going to bet the farm on, well, I guess I'm going to hope rates come down and I hope buyers come back. And I hope that, because they've kept doing that, and then they find themselves in the same position they're in right now, right? They got more confident in the summer. And they said, well, this is going to continue, so let's build up some specs. And now they're going, oh, shoot, we have way too many specs.
But every single winter that happens to them.
I know. So they probably should have been more thoughtful about how they were building out, but it's kind of the position they're in right now.
It's also, I would be curious to hear which builders get included in this as well, because like if I'm a custom home builder right now and you're looking at 7% interest rates and you're building half the number of homes that you normally would, like a buyer has to come to you and want to build a house with you, right? So it's a little different. Lennar's making very small changes most of the time. So I don't even think when rates got really, really good that they were like, let's build 1 million homes now.
But they operate on really thin margins. So a small change for Lennar actually has a significant impact on their business because their margin rates are so different. So if you're dropping price or you're taking huge concessions on rates, you go from being really profitable to being, oh shoot, we're kind of getting close to tipping upside down.
For sure. I do think the other thing that you have to factor in is when a builder is building a development with just their homes in it, there's a lot more thought placed on making sure that you're not cutting prices at the end too much for the rest of the consumers that already built with you, because your reputation matters a ton.
Well, and that's one of the most important points that I think we can make right now, because what we're seeing is the builders are offering crazy rates right now, right? Mm-hmm. The bigger builders specifically, but when they're building these communities out, like Lennar's got 4.99 rates on pretty much every development right now that you're buying.
There's 7 arms, I think.
But they're offering.
I just want to make sure we're clarifying.
Yes, but you can get into a home with a 4.99% interest rate, and the reason they're doing that is because they don't want to take on price. They'd rather pay down your rate, because then they can essentially keep the price of the community at a higher level, right? So if they, instead of taking a $35,000 hit on price in order to, fund these lower interest rates or whatever they're having to take, what points they're paying, et cetera, they're just saying, I'll pay that on the rate, but I don't want the purchase prices to come down because I need to keep my purchase prices at a level where the other homeowners in this community feel good about what they paid. And because then if things get better in the spring, the next person coming in isn't going to go, well, that one sold for this, I'm not going to pay this for it.
Can I wrap a bow on this with a micro case study that I just had happen to me?
Yes.
So I have a client who will not be named and a national builder who also won't be named, but situation was home is pending under contract. Another home across the street's active. The pending home went under contract in March with a buyer, right? It was not built yet, so it was due to be completed sometime in November. My client saw the exact same floor plan across the street. I bet the lot premium difference was maybe $10,000, $20,000, right? So the pending home was worth $10,000 to $20,000 more in national builders' mind, right? So the price of the one that was pending finally closed right before we closed, and we got under contract on that house at $877,000.
Was the other one across the street a spec house?
Yes.
Correct, okay.
So spec home's completed. We go under contract. While that's pending, like I said, we saw that it closed $877,000. The price of the spec home that my clients purchased started, I think, at $869,000. Drop. We went under contract at $795,000. And the closing cost incentive that we got, I want to say, was worth about $50,000. So we got a 5.625 rate for 30 years. So it was a 30-year fixed. And the agent, once we went under contract to this point, called me and said, would you be okay if I just cancel the listing and don't mark it sold with you on there on the MLS? I don't want to make everybody else mad, and I don't want to screw up all the appraisals for everybody in the neighborhood. And I said, well, you're lucky it's me. I really don't care about the stats, but I'm very happy that that's what you're thinking about doing, because that means my client got an absolutely ridiculous deal on the house. Point being, that seasonality of when you go under contract on new construction, especially in a volatile market, can really have a huge impact on your client's outcome. So my client ends up getting 5.625 30-year fixed. Rates were 7.75 when they got that deal. And they're $80,000 below what the other house is. So they might be up $60,000 in equity. and they were
Or
only
the other
10%
house is-
down.
Or the other house is out $60,000.
Exactly. One of the two, right? But
Yeah.
we can use that house as a comp now and potentially get rid of the PMI, even though
Oh,
we were
sure.
at 10% in like 6 to 8 months. So just a super interesting case study on everything that's going on with these builders. But to Josh's point, I think knowing like a company like Lennar would be an interesting one. We talk about this often. You should know when the year end is for a publicly traded national builder. They will literally do anything they have to do to get you in contract.
Yeah, Lennar's is November. They end in November.
What month did you go under contract? Just so they know. Like if you're looking at a new build,
If you're looking at a new build,
you went under contract on that one in November.
well, they'll want to close.
October.
They'll want to close on November 30th.
They
now,
will.
If you go
But
to
when did your buyers?
October, I think.
It was in October. So even as soon as October, that's not that far into the winter, is what I'm saying.
No,
Like,
exactly.
You can be out there in October and, it still makes sense.
for Lennar. I mean, DR Horton. I haven't looked at them or Pulte. They're all national and publicly traded. They'll want to get under contract or closed. So either one. So when they do their quarterly earnings call and their year-end fiscal call, they want to say, we closed this many units.
For sure they do.
And we also have under contract this many right now. So both of those matter a lot. So they will fight very hard for your client to get a great deal, and no one's going to cry boo-hoo for a large publicly traded company.
Yeah.
And so when you're trying to arbitrage these situations, there's a lot of opportunity out there to get your client into a favorable outcome.
Yep, this happened. I had a client where the same thing happened. This was last year, right before November, where we just played hardball. We said it's worth this, and we were probably 60,000 below the market. And they said, "Nah, we can't do it. Now we can't do it. Now we can't do it." And then on November 15th, they're like, "If you guys can close by the end of the year, our fiscal year, end of this month, we'll do it." Like we held out long enough that we had like a 10-day close or 12-day close, but they got it done because it was Lennar Home Mortgage anyways. And yeah, I mean, it's just important to know these things. Like DR Horton, it's September is the end of their fiscal. So like these different timeframes and quarter ends too, right? Those matter as well.
But their quarters don't always end at the end of a quarter. You know what I'm saying? So
well, the end of those fiscal quarters.
Yeah,
so it's
that's
December,
different.
Jan, Feb for Lennar,
Yes,
or
exactly.
March, April, May.
Yep.
So, but if you understand those things, especially for the builders that are most prevalent in your areas, you can play these different roles. And especially right now, you said I'm usually a fan of, going with a already existing home. I just like them personally. But like right now, there's nothing to buy. So if your clients are out there looking to buy and they're going, "Hey, I want to get into a house. Hey, I want to get a deal. Hey, I need a better interest rate." It's a really good opportunity to kind of start looking at new construction in a meaningful way, because you can kind of check more of their boxes with a lot of these homes. Getting a good deal, getting a good price, getting a good interest rate in ways that you just can't any other way right now.
So it sounds like you're both pretty sure on the fact that the end of the year or the end of their fiscal year is a good time to build a house,
Yes.
to buy a spec home. Do you think in the next 6 to 12 months, so let's say we enter January.
I guess I'm speaking more to specs than to be new
You're talking about
construction,
specs,
new
yes.
builds.
Yeah, let's just talk about specs then.
Yeah.
Because that's what, again, depends on the city. If you're in Florida, we have no idea what they do when they build houses, but I would say a majority of the houses they build here are specs in this price point at the 600 to 800, which is like the step up buyer.
It depends. Like during the 2020 to 2022 timeframe, they weren't even doing dirt builds. Like you couldn't go in there and be like, "I want to build a Taylor floor plan on this lot." They were like, "We have 3 Taylors being built right now. You can pick one. Here's all the finishes." Because
we'll
they
call
didn't,
you when the other lots open up.
Exactly. And the big reason why is I think they realized they were probably making about the same amount of profit whether you dirt built or you bought a spec.
Way less time.
And
way
and
easier.
they don't have to deal with going to the design center and walking through the whole purchase, like everything that's in the house. It's like it's in there. So we'll tell you what's in there, but you can't change it.
So specs, do you think as we enter January, as we go into 2024?
What do you expect with them?
It's very good.
Bad dad joke.
Very good.
I'm not
Someday
there yet.
Luke
I'm
will
not there yet.
understand.
Yeah, it's 6 months, Luke.
Would you say that 2024 is going to be a good time to build a house?
I've been selling a lot of new construction every single year for the past 5 years, and I think they're great opportunities, especially for the right buyer, right?
Yep.
As you go through real estate, so for the agents listening, you realize that you end up working with people that are kind of like you, right? So Luke, you'll probably be at the phase in your career when you're about my age where a lot of your clients and friends have been in their home for 5 to 7 years, and now they're thinking about getting something bigger. Not only do these communities offer a lot of other folks that are in that same phase of life, so you end up with this nice community feel, but also you get a completed brand new thing. And you don't have to deal with hopefully the roof or the siding or the windows or the furnace or the AC or the water heater and all that stuff for several years before you have to fix things.
And a lot of times you're in a life stage where you feel like you have less time because you may have young children, or you may have there's a lot of things that we lived in a new construction house when we moved, right? And that was the big thing, was like, oh yeah, I'm just not gonna have to worry about stuff.
And emotionally that feels really, really good for the right person. Now some people will say it's too cookie cutter, it's too this, too that, and that's not the right situation for those people. But I do think 2024 will be similar to the last 5 years, where it's like there will be good opportunities to do that. But I think we've talked a lot about these national builders, and there's a lot of custom home building going on right now too. I was just stopped by the one that I have going on in our neighborhood that is starting framing today, just to check on those guys. And that's also it's a completely different thought, Luke, right? I mean, when the rates were going up, custom building gets to be a little bit more of a, I don't know where we're going to land on the rate, because sometimes you can't lock in your final rate up front.
Most of the time. You have to pay for it.
You have to pay for it, right? Yeah. So on these national builds, when I lock in 5,625 with this national builder, that's just the and granted that was a spec, but you can just say that's the rate, that's what it's going to be, because they'll just account for that in what they're doing up front, because like Josh said, they've got their own mortgage companies.
One more question to wrap this up, just because I'm curious. This is more of a random magic 8-ball. In the next, let's say 10 years from now, most of the communities that are currently being built out, the Victorias, the Shakopees, those new build areas, they're going to be out of land because they will have built all these houses. How far away do you think the new build community is going to be in 10 years from Minneapolis?
In Minnesota.
From Minneapolis.
They'll keep sprawling.
I think it will. I mean, if you look at other major metro.
Look at Delano right now.
And you look at other major
That's
metro.
not that far away, though. I'm talking
from downtown.
Farther.
I think if you look at major metro areas across the country, we have a much tighter to the city situation than other places have. A lot of people will commute for an hour to get to work in
Chicago.
Chicago is a great example.
Atlanta.
I mean, Seattle and Atlanta and all these other big cities that we're not that far off of from a population perspective. We are fairly densely populated for our state, just in one specific
We only
area.
have one airport. Do you ever think about that?
It's wild.
You go to Florida. Do you know how many airports are in Florida?
13 probably.
There's only one in Minnesota.
Yeah, it's wild.
Because everyone lives within half an hour of the airport.
Who owns the airport?
The Minneapolis Airport Commission.
Yeah, I think.
Because that sounds like that would be a nice little business opportunity.
It's probably a government-owned entity. But either way, right?
Wouldn't it?
State-owned.
I think you will see in Minnesota, we don't have much space to the east until we're in Wisconsin. Right? So Lake Elmo's can continue to get built out in there. But to the west, I mean, I've thought about that. Will land be more valuable in places like St. Bonifacius? As you go on Highway 7, there's farms. I was just out in Mayer. I have a listing coming up out there. It's farm.
St. Michael, Albertville.
They're all going to get built out. Yes.
So, and then Luke, to your question before this, I think it's important to, as an agent, right? It's not necessarily what's the next year going to look like? It's more so in these moments, understanding where the builders are at, right? So right now, confidence is low. When confidence is low, there's arbitrage opportunities for your buyers. Keep on top of that as an agent, because that will allow you to follow this stuff more closely in a way that then you can create value for your clients, right? I had a new consult last week with a referral. He was like, hey, I'm in this townhome that's 1,600 square feet. I just had my first baby. We've only been here for 3 years. We have an interest rate of 4% or 3%. So we're not in a hurry to get out, but I'm not going to be able to stay here. I need more space. The problem is these rates, I don't know what to do. I need to get to a better rate. And really the only good option in the short term that I had for him was, right now the builders are super desperate to get rid of some houses. Some of the areas that you said you wanted to live in, there are new communities going up. And right now there are rate buydowns into the 4.99% range for periods of time. So if you want to go look at some of these houses that check all of the boxes you gave me and give you an advantaged rate, now's a pretty good time to go do it. And I can't guarantee you that in March, that's still going to be an option for you.
Right.
So know when these little things are, pockets of opportunity are happening, because that's when you can get out to your clients and start to be able to add that value in a way that, if I didn't know that the builders were desperate and they were doing these things, I might not have brought that option up and I've been like, yeah, it just kind of sucks right now. I guess we'll just wait. So you just got to figure out when that time is.
Brilliant.
Love it. And that's all we have this week on the Nerdy Agent Podcast. And as always, remember, be better.